For those of you that don't know me, Devon Martin, and I have the humble honor and privilege of being your carrier representative. And I absolutely don't take that for granted. Just like every time you submit an application, I don't take for granted there's 700 other insurance carriers you could submit them to. Whenever I do these meetings, if you will, I always love for it to be more of an interaction instead of a presentation. And as much as I love compliments and flattery, as we just experienced, I do want to hear your headaches too. If you guys did this better, it would be easier. Or how can I get around this headache that I'm having? Please, this is our locker room and I want to hear from you. I'm going to go in a few different directions, but since the application is the hot topic, we will talk about that. And I'm going to talk about the application right now, specific to our Flex Life and our Term Life. So we did come out with our Instant Decision Rapid Protect product. I am going to touch upon that as well, but I first want to go through the fully underwritten side first, quote unquote, fully underwritten, because we do go up to $5 million non-medical now, up to $5 million in face amount. Marissa, you unmuted yourself. Did you want to say something?
No, I just wanted to
Okay.
make sure I could if I wanted to. Thank you though, Devin, for
No, no
noticing.
problem. Okay, so I will tell you this too, and I'll get into that when I get to that section as far as when you can push back on the underwriters, whether or not you didn't need an APS, but I'll talk about that. For now, I want to talk about some of the things not to do and what to do, because this is the moral of the story. National Life Group's instant decision at the end of the app are fully underwritten is about 35%. So 35% of our fully underwritten cases never touch an underwriter. If they don't instantly approve, it could be as simple as clarifying the insurance carrier you recently purchased coverage at, or you didn't disclose the medication, so on and so forth. FFL's instant decision on our fully underwritten, I have to stop saying that. Instant approval on our fully underwritten is only 25%. And just to be direct with you, the reason why that's so low, one, I realize that buyers are liars. You are only as good as the information the client's telling you. I wholeheartedly agree with you. However, let's face reality, we live in America. If you have 10 sales and 10 applications, and every client said no to every single medical question, one person, if not more, are lying to you. But with that said, this is kind of the moral of the story. How the electronic application is filled out is just as important as the health of the client. And it works in you and the client's favor to disclose that information. And I'll give you an example. Let's say that you have an extremely healthy client, great credit score, no speeding tickets, haven't been to the doctor, but they recently applied at another insurance carrier activity. And I'm using this example intentionally because you all purchase a lot of leads. If you didn't disclose that the client applied at another life insurance carrier, even if they didn't accept the policy, that policy is not going to instantly approve. And it's going to take 3 or 4 or 5 days to be reviewed by an underwriter. You could have somebody with diabetics and prescribe medication, but if you disclose all of that information, it's going to instantly approve at the end of the e-app. And the reason why I'm spending some time on this is because this is the difference maker of you guys getting paid within a week or two or 2, 3+ weeks. That's why it's so important. And I want to talk specifically to the conditions within the e-app and especially underwriting. So we're going to talk about diabetes for a second, and I'm going to open it up for some underwriting questions. You guys can say the I got a guy. So this right here, which I can send to all of you, is how to get more instant approvals with National Life Group. I want to talk specifically about diabetes right now. And this is directly from my underwriter, by the way. When it comes to diabetes, as long as you're diagnosed after age 20, you can be considered for coverage with National Life Group. A lot of carriers are 30, 40 years old. We are 20, 20 plus. However, if you ever see neuropathy or you see severe kidney impairment, don't submit the application. Don't submit the application. If their A1C level is higher than 10, don't submit the application. Also, for you and your field underwriting as an agent and as a broker, it's kind of a red flag if you're working with a client and they don't know their A1C levels. That's not a good thing. But when it comes specifically to diabetes, neuropathy, severe kidney impairment, we don't want to touch it. We just don't. With all that said, and again, I am taking time on this because I know how quickly it is for you guys to get paid fast because that's more money you can invest into your business and more families that you can help. When it comes to the application, you want to make sure you're disclosing if they applied to another life insurance carrier. That's the big, big, big one. Always disclose the medications. Even if they were prescribed the medication and they're not taking it anymore, you need to disclose that information. Also, always include the primary care physician. We flat out do not care if you're seeing a doctor, if you're younger than 60, unless you have health issues or you're a child. I know there's adults that are children, but when I say children, I mean 5 years or younger. So we don't care if you have a primary care physician unless you're older than 60. However, you have to put something in there every single time, include the doctor's information. If they don't have a doctor, ask them if they went to the ER recently, and then just put that doctor's down, that information down as well. And last but not least, if you're denied at a final expense carrier, we're not a last resort carrier. We have the best product in the industry for a reason. We've been around for 177 years, and we're going to continue to have the best product and be around for another 177 years. So we're not a last resort carrier, but it also depends on the denial reason. We take 10 tax identification numbers on our fully underwritten business. So if you're denied at a company for that reason, totally different. But with all that said, I'm going to leave us off with a fun fact, and I'm going to open it up for questions about the e-app, which I'll show in a second, as well as the underwriting. But in 177 years, National Life Group has only had 16 CEOs. In 177 years, we have only had 16 CEOs. So I don't know if you guys have ever seen the meme where there's like five Spider-Men pointing at each other. That's not how our company is ran. We know what we're doing. People stay at our company. And again, that's how we are able to operate as well as we do because of our leadership and the history of our company. But with that said, I'll look in the chat box. But any questions on underwriting or the e-app or anything at all so far?
I think so far we're rolling. And Devin, what I'm really hearing you say is like, disclose the information on the application because we are going to find it and we don't need you to submit business just to submit business. So guys, thank you, Devin. So that really clarified that. Appreciate you.
Of course. And by the way, whether you're selling simplified issue, fully underwritten, any carrier, the biggest slam dunk, home run, touchdown, everything when you submit a life insurance application as far as underwriting is what is being found in the database and what is disclosed on the application. So what's being found in the research and engine and what is being disclosed on the electronic app, if those two are parallel, that is the perfect scenario when submitting a life insurance application is they have to be consistent. Sweet. Okay.
I got a
So
question.
go ahead.
One hiccup that I've come across is where people are relatively healthy, meaning they don't have major health issues. However, the challenge has been if they had a major surgery in the last couple years and then they were prescribed like a heavy painkiller. What's the route for that? I mean, it's just kind of disclosing on the application or what? Because I mean, what are there any ways to avoid delays in processing of those kind of applicants?
That's a good question. Paint the color for the underwriter. Because picture that I'm an underwriter at any company and I'm sitting down at my desk and an application comes across my desk, the 100th one of the day. And I see that a client is prescribed a very intense medication and I don't have anything on the application. I'm going to have to reach out to the agent. Why are they taking this med? What was the results of the surgery? What was the surgery? So the more color and information you provide on the front end helps you on the back end. With that said, and this is especially true when you're talking with people in the case communication, treat it like you're on trial. Just address the questions that they're asking. If we're not asking for the information, we don't need it. So honestly, don't get defensive and say certain things and get on a tangent. Just speak directly to what they're asking. But to answer your question directly, just paint that picture and add that color for the underwriter. That way, when it comes time for them to review, if it didn't instantly approve, they have what they need to make an offer. Great. I'm not going to show all these slides, but I do want to show some of the slides. So, I actually really like this slide. I'm going to show it. So I asked ChatGPT, and this isn't like NLG ChatGPT. You can see it right there, 5.2. I said, be direct. With IULs, what companies usually perform better for clients? A public company or a mutual company? And the answer is obvious. I didn't do that, but thanks for whoever did that. That's really cool. Brings eyes to that part of the answer. Unless I did do that, but I don't think that I did. So mutual companies are owned by our policyholders. I love you too, Jesse. And Public companies are owned by the public. The first thing that they have to do is please their stock and please their shareholders. It is completely legal. It is totally fine for insurance carriers to increase cost of insurance on existing books of business, which we have never done since 1848. We have never increased cost of insurance on our existing books of business. Additionally, they can lower rates. They can say, you know what, let's pull the client in. Let's say that the first year we have a 10, 15, 20% cap. But then year 3, 4, 5, 6, or even year 20, we're going to eat at these rates and lower them really bad. And then we're going to use that money to put our name on a Super Bowl commercial or a Taylor Swift show, anything they want. They can do whatever they want with the money. We don't have that. The reason why we're number one in IUL sales every quarter, every year, one, because we're mutual and you don't have to apologize to your clients after the policy is issued as far as the return that they can get. And it's no question our living benefits and our high non-medical underwriting. And the last and most important reason is you make me the happiest when you sell a National Life Group policy. But when it comes to all of that, I want to spend some time on this for a second. And again, this is specific to our Flex Life IUL, the fully underwritten. We increased our non-medical to $5 million. You technically could need an APS. And for those of us that are newer or might not have heard of that before, an APS is a bad word, but it's an intending physician statement. It can be a headache. Sometimes these are handwritten notes, pages upon pages of doctors, and we don't necessarily have AI and everything just yet to review all that. So an APS could be, I was diagnosed with cancer 7 years ago and I'm completely cancer free, but National Life underwriters need to know more information on that. So we have to see what the doctor is saying. What I'm getting at right now is you can push back on our underwriters strategically and intentionally within these guidelines. So if you have a 40-year-old client and they're truly healthy, no meds, everything else is checking out, and it flags for an APS, you can push back a little bit on that underwriter and say, hey, are we able to make an offer? They truly don't have any medications, or their height and weight just might be a little not ideal, whatever the case may be. They don't have to be perfectly healthy. However, just speak with the underwriter and see what they can do. More oftentimes than not, the underwriter will be able to be flexible with you. We don't underwrite the conditions at National Life Group. We underwrite the client. So I'm going to say that again. We don't underwrite the conditions at NLG. We underwrite the client. Meaning, I could have a 40-year-old who was diagnosed with skin cancer, but maybe it was a little spot. They got it removed. Everything is great. That shouldn't be a big deal. If I was diagnosed with a different form of cancer at that age and it was more intense, obviously it's going to be different. But we're significantly liberal and flexible when it comes to the underwriting space. So I'll keep chugging along, but I wanted you guys to be aware of this. And I will talk about, again, I'll talk about Rapid Protect at the end. I just don't want to get confused between the two of them. But closed mouths don't get fed. So speak up, ask questions. I will show you guys this because I want to show you how much we appreciate the relationship with FFL. So these are National Life Groups underwriting turnaround times. So I love when people tell me, they say, Devon, it takes forever to get policies issued with the National Life Group. I love hearing that because I know if it's taking forever, I'm going to ask what you're comparing it to. If you're comparing it to a final expense product, you can't even have that conversation. It's night and day different. I'm going to emphasize this. I'm not speaking badly about final expense. There's a place for that in this industry. I'm just speaking about what we offer specifically. Average submit to issue in all of NLG, 60% of our cases issue within 10 days. Obviously, that's an average. I want to show you how much we appreciate the Family First Life relationship. So a year and a half ago, roughly, our underwriting team decided to give 5 agencies some special treatment. And when I say special treatment, these are FFL's average turnaround times in our underwriting. So 70% of cases issue within 10 days with Family First Life applications. And submit to issue, it takes 9 days. So again, this is National Life Group's underwriting overall, and this is FFL specifically. So just showing you how much we appreciate the partnership and we realize the possibility that we can do together. Because in 2019, when I started supporting you all, we did a whole $100,000 in production, a whole $100,000 for all of FFL. Last year, we did 27 million. I'm trying to get to 100 million as soon as possible. And with the tweaks to Rapid Protect, I'm certain that we can get there. So Here's our beautiful website. You can check a lot of information. Am I able to erase that red ink right there? I see an eraser. Yeah,
But
I
Jesse
can.
can.
No, I got it. Sweet. Exit out. Okay. Um, so do you guys want to see, I'm all ears. Do you guys want to see a quick illustration, then going into the electronic application? Jesse's nodding his head, Wes is nodding his head. So I don't care about Jesse as much as I do Wes, so I'm going to do it just for Wes. So we'll go ahead and do life. I can do a separate annuity training for you guys later on as well. I will say that you guys should be talking about annuities way more. Every 5 life insurance applications, I guarantee you there's an annuity opportunity. And the reason why, and I'm not going to go off on a tangent, but I'm just going to say this so you realize the opportunity. If you work for an employer in the United States and you leave that company and you have accrued at least $5,000 in your 401k, your company has to legally hold that money there for you. So if you have a client and they switched jobs recently and they accrued at least $5,000, the employer is legally liable and they have to hold that money there. That right there is an annuity opportunity rollover for you because you'd be shocked at the amount of money people sometimes forget to roll over and bring with them. But nonetheless, I was digressing a little bit. So we'll just choose the state of North Carolina. And if you don't know this, please hear me loud and clear. Never do an NL product. Never do an NL product. Never do an NL product unless you're in New York. You won't make that mistake twice. The reason why is the commission is half and you have to redo the entire application. Why is it in there? I've begged them to remove it, but I haven't gotten a good enough explanation. So always do LSW, always do LSW. So we'll go ahead and choose a Flex Life. So we'll choose Flex Life. We'll design a proposal. We'll do Bad Bunny, and we'll change Bad Bunny's birthday because you can't do an EAP on your birthday. And I'm going to talk about the rate classes. So these are in order from best to worst. Elite non-tobacco, obviously the best rate class. A lot of times people think, let me submit the client as preferred or elite. It's going to increase their chance or they're truly preferred or elite. It doesn't matter what you quote as the agent. Underwriting will give them the rate class that best suits them. In my opinion, it is already difficult enough for you guys doing what you do. I don't want to put you in a situation where you're going to have to sell the policy twice. And what do I mean by that? If you quote them elite and they get preferred, they're going to be pissed. If you quote them standard and they get preferred, they're going to be happy. So under promise, over deliver, really that's sales 101. So when it comes to illustrations, they are super easy. I'm going to be very transparent with you. I don't love that we included this stuff up here, and I don't love these new solves. I just don't. I'm going to show you guys how you're going to design a majority of your illustrations. Keep in mind, a majority doesn't mean every single time. Obviously, there's different clients for different needs. And there's always those social media experts that say, oh, this agent really screwed over this client and designed it the wrong way. That could potentially be true, but I'm just going to give you guys kind of a truth bomb, if you will. Minimum death benefit, maximum cash value. It is the most popular way to design an illustration, but it's not the only way to design an illustration. And I'll give you an example. My parents are in their 60s, and I got them a life insurance policy. They're not doing it for minimum death benefit, max cash value. They're in their 60s. At some point, clients need to understand you're in it more for the death benefit and the living benefits than you are the cash value. So it's not a one size fits all. It's called Flex Life for a reason. It's because it's very flexible. However, let's bring it back to Bad Bunny's situation. He is 41 years old. Let's do minimum death benefit, maximum cash value. I'm going to show you guys how simple it is to do our illustrations. I realize there's easier solves. If you can read between the line, I know there's easy solves, but really it's so simple to do what we do. So minimum death benefit, max cash value. I'm going to specify the specific premium. I'm going to specify $300. We can talk about level and we can talk about increasing in a little bit. My personal opinion, I like level whenever clients are mid 30s and older. Generally speaking, I like level. The reason why is because the death benefits higher out the gate, which means more death benefit and more living benefits. And when you do increasing, the client has to remember to stop the increasing death benefit when they are done paying premiums. I don't care what anybody says, that doesn't happen on its own. And not many people are going to be around in 20, 30 plus years to remember to tell clients to do that. However, it's not a one size fits all, so you can do what you want for your clients. We're now in a spot where you do have to choose your specific interest rates. And when it comes to interest rates, I always get asked, what is the best interest rate? And I say the same thing every single time. I will tell you next year what you should have picked today. There is no way to predict the market, and there's not a best strategy. Otherwise, only one strategy would exist. I will tell you what Devon Martin does on his IUL. I do 80% in the point to point cap focus, and I do 20% in the pace setter. Why do I do 20% in the pace setter? Just because it's a different strategy. I like the S&P 500 because it stood the test of time. Everyone knows it. Nobody's really heard of pace setter. There could be look backs and certain time periods where one strategy doesn't really perform that well. But when it comes to interest crediting allocations, even on annuities, picture them like you're driving on a 4-lane highway in a really big city, whether that's Los Angeles or Chicago. I'm in the passing lane and I'm in the S&P 500 point to point cap focus. The lane's cruising along. However, I'm now stopped bumper to bumper traffic, and the second left lane is the pace setter. That lane opens up. So I put my blinker on, I go into the other lane, and I go, and that's bumper to bumper traffic, and the lane I'm just in passes me. That's the analogy of interest crediting allocations. People try to predict it and get ahead of it and change every now and then. Anywhere you have your money, historically speaking, whether it's mutual funds, IULs, anything, you have 3 bad years and 7 great years. That's the average returns and time frame rather of index allocations or really anything. So that's what I do for my interest crediting allocations. I compare a lot of these to hot dogs. What are hot dogs? Hot dogs are fantastic. However, just give someone a hot dog. Do not explain how they're made. Otherwise, they're not going to want it. So I do the same thing with these. Just keep it very, very, very simple. I go to my quick view and the illustration is done. I can take any questions so far, whether that's increasing, level, so on and so forth. But that's how you're going to design a majority of your illustrations.
If you have questions, guys, feel free to unmute or put them in the chat.
I'm either
Devin, I have
doing
a
perfect.
question.
Yeah, go ahead. Thank you. Finally, go ahead.
So if let's just say we have, I don't know, 30-year-old, Bad Bunny here, let's just say, okay? And
Mhm.
let's just say he already has a IUL with ABC company and he wants to add another IUL. How do we know when it's like when he's at that limit?
It's a good question. So there is such a thing as over insuring somebody. I will tell you, just to be very transparent, with the typical clients that you have, you guys probably won't come across somebody being at their limit. If they're at their limit, they're probably making anywhere between $40,000 to $75,000 a year. And the reason why is you got to think about your income. If you can't be paying for your Netflix bill, you probably can't afford your IUL insurance premium. So as far as being at your limit, it's just figuring out if they can simply afford the premium. It's really that simple.
Okay, that makes sense. Thank you.
I don't have a magic formula for you guys, but you guys should have a decent understanding when you speak to the client, as far as what they can afford and what situation is good for them.
That makes sense. I more so mean, Devin, like on like a tax end. There's not like they can have more than one IUL.
You can have as many IULs as you want. When it gets into taxes, it's $5,000,001. So if ever the death benefit is $5,000,001 and higher, you do actually have to have tax returns, and sometimes a CPA has to have those tax returns signed.
Perfect. Thank you so much for the clarity on that.
Yeah,
Appreciate
of
you.
course, of course. Wes?
Devin, I've got a question. Yeah. So, hypothetical scenarios. Say you come across somebody who's got a National Life Group IUL, both for them and their child. Their
Mhm.
child is 4 years old, and as you review that policy with them, you recognize that the agent probably did it unethically because it was structured for death benefit with a term death rider on it and all this stuff. How
Mhm.
would you advise an agent to go about working with that person and helping them to get it in a better situation?
So this is a common situation. So I'll spend some time on this, okay? Just to be very direct, sometimes, unfortunately, the client's kind of screwed. So this is the situation. If I get sold an IUL and it is designed poorly, an agent did it based off of their commission, the death benefit is so high, I'm not funding it very well. You can't just get your premiums returned to you after 7 months, 16 months, 18 months. There's a lot of cost and everything that goes into the policy, and we were on hook for that death benefit if something happened to them. So there's a cost with that. Here's your options as a client. What you can do is every year after the first year of the policy being issued, you can decrease your death benefit by 25%, which obviously decreases the cost of insurance by 25%. That's step number one. Another step you can take, and this might, I don't know, I'm gonna have to go through this beginning to end. And if it's confusing, please hold me accountable. But what you can do is this: IULs have a 10-year surrender period, generally speaking. If I get screwed over, what I can do is decrease my death benefit every year by 25 years, only pay the minimum premium. Why do I recommend paying the minimum premium? One, you don't have to kiss away all the money that you just paid for. And there's what's called the death benefit protection period. No matter what the index does, the death benefit is guaranteed for a certain time frame. With us, it's always at least 10 years. Start another IUL. So Wes found a client, saved them. He's going to submit a second application, have it properly structured. After 7, 8, 9, 10 years, they're going to take the cash value from that original IUL and put it into the new IUL. That way they didn't have to kiss everything goodbye. If I didn't explain that well enough, let me know, but that's a workaround that I have found.
No, that makes sense. Thank you.
Okay.
I've got another question.
Mhm.
Something I've been trying to put together is I want to advise people as to help taking their savings and plugging that into, instead of doing say $1,000 a month into your savings. Let's say I've got a client who's got 100,000 in their savings account, and they're doing $1,000 a paycheck, getting paid twice a month. Well, I'd like to coach them as to why an IUL makes more sense for them. Is there a way to take that 100,000 and have them break it up over, along with their $2,000 a month that they were originally putting into savings? Like, how would you coach somebody on advising that client? Does that make
Yeah,
sense?
it does. So is your question basically taking a lump sum of money and trying to get it into the IUL? Is that where you're going with your
It's
question?
a combination. So what I would do, and I'm still relatively new in this space, and so there's a lot that I have to learn. But let's say that somebody's doing 2,000 a month in the savings. What I would coach them to do, if I've got good rapport and solid trust with them, is take a percentage of that, and instead of putting it in directly to a simple savings account, plugging that into an IUL. And then I'm looking to try to understand if it makes sense to be able to advise people to take what they've already got into savings and plugging that into the IUL too. Does that make sense? So I want them to keep some going to their simple savings, but I also want to help them to use that money better than just sticking it in a really simple savings account in the bank.
It does make sense and it can make sense. I'm a proponent 100% of the time. If someone doesn't have life insurance or doesn't have enough life insurance, you need to get that client covered. Even if you're anti life insurance, no financial portfolio is complete without the protection of life insurance and the protection of life insurance with living benefits. So if you come across a person and they have money just sitting in their savings, doing nothing, it might not immediately be an IUL opportunity. Maybe it could be an opportunity for an annuity. But let's say it is an opportunity for the IUL. As long as the death benefit can fit the amount of money, then you could put it inside of the IUL in quite a few ways. And when I say the death benefit can fit that amount of money, I'm referring to if you do minimum death benefit max cash value and it's $300 a month, you're not going to be able to throw $100,000 into that policy. You're going to have to make the death benefit a little bit higher. So if one is already issued, Wes, it makes it a little bit difficult. But let's say that a policy is not issued yet. With us, you have what's called a premium deposit account rider. It's called PDA. Kind of easy to remember. So PDA, premium deposit account. What that does is it takes a lump sum of money from clients, and instead of them spending that money at Christmas or vacation, we take the money all at once. And I'll use the example of $100,000. Let's say that a client wants to put in $100,000 into their insurance policy, paying monthly or not. We take it all out at once, and we would throw $20,000 into the policy every year for 5 years. Why would you do something like that? One, it spreads out the money going into the policy and lowers the death benefit to make the cash value better and structuring and funding the policy better. And like I just said, it prevents the client from having to put in more money later or run the risk of them self funding the policy or spending that money when you originally designed the policy to fit the premium. So I went in a few different directions there, but I hope that helps answer your question, Wes. And finding out when, find out how much they have in their mortgage, find out if their kids are in college. Honestly, I think that we should do a better job finding out if they have the correct amount of coverage, because I could be a lead and purchase a life insurance policy, and purchase a lead to get a life insurance policy. But sometimes agents are too quick to talk about the cash value or hurry up and get the sale. You want to make sure that you do the full plan with them and you don't underinsure them, because the worst thing is you do a minimum death benefit max cash value for somebody and you give the spouse the check, but they can barely keep the house. They can't send the kids to college. You don't want to underinsure people. And I will tell you this also, 70% of the time, the reasons why clients continue to pay for their life insurance policy was because that producer sold them off of the death benefit coverage and or the living benefits. Roughly 20 to 25% of the time is because it was sold off of the cash value. And if you think about that, that kind of makes sense, because IULs are a marathon, not a sprint. If I look at my cash value 4 or 5 years into it, I might kind of be shaking my head and forget about what I was sold off of for the minimum death benefit max cash value. But if I have kids at home and kids in school and a mortgage and a wife or a husband or a spouse, I'm going to kind of remember that I need to protect them. So I'm not saying don't sell IULs off of that. I'm just saying don't overlook a lot of their other potential. And with that, I'm going to put in our living benefit testimonial in the chat box. These are videos, and we now have some in Spanish. I think we have 4 or 5 in Spanish. These are clients who have exercised our living benefits, our accelerated benefit riders, because we paid out $123 million last year in living benefits. I'm not talking death benefit. Our total benefits were 3 billion with a B. Just living benefits alone, National Life Group paid out 122 million. And I will put our living benefits up against any carrier inside of the industry. We are second to none with those. So again, I know I went off on a tangent, but I can show the application in a second as well. Any questions before we kind of get into the e-app? Anything at all?
Yes. Could you please show on the illustration where to show a cost of insurance?
Of course, Stella. And I saw that you called me. I don't know if that was a butt dial, but I did see that you
What
called me.
about
Like,
that? Sorry.
okay, all right. I was gonna call you back, but I had to get on here. So I'm gonna show you guys where to find something, but I'm gonna encourage you to try and never have to click it. So the analogy I will use is this tells you how the watch works instead of telling you what time it is. And what I mean by that is these buttons are unchecked for a very good reason. It's gonna have the client come up with questions that they just don't necessarily need to ask, because IULs can be complicated enough. But if they wanted to know everything about the IUL, it's policy, charges, and expenses. And when I talk with people who really want to dig into deep on products and compare carriers, this is actually something that I click because it shows you how our IUL is priced and why it's competitive. So if I click on policy, charges, and expenses, nothing's going to change inside of the system. But once I run the report, at the very, very end, it's going to break down for you the costs inside of an IUL. And I get the question quite often, how much of my premium is going to the death benefit and how much of my premium is going to the cash value? If you're a 40-year-old smoker, that question is going to be different than if you're a newborn baby. So at the end of the day, what I'm getting at is this section at the very, very end breaks down for you to the penny what the expenses and charges are inside of the IUL.
Devin, can I say something real quick?
Yes, of course, Jesse. Yeah.
So
So I have found that, especially when I was newly selling this, and it happens not all the time now, but sometimes now, that when people ask certain questions, sometimes we assume based on our own mindset what we think they're asking. So sometimes when someone asks, so what's this all cost, it's going to cost me? They could be asking, what are you going to get paid? What am I paying you? Because they saw a TikTok video. They could be asking, what are the hidden expenses and fees and things like I got screwed on my 401k with brokerage fees and accounting fees and all kinds of printout fees. Or they could literally just be asking, so what's the cost? I have found that most of the time when they ask me that, if I say, well, the great thing is, you know how with your 401k, because they don't know this, but you know how with your 401k you're paying brokerage fees, you're paying accounting fees, and you're paying all these fees? With this, you have insurance. So your cost is actually your insurance. So if you pass tomorrow, your family gets 500,000. If you get sick, you get lots of money to take care of yourself. So the cost is the insurance that you actually get. So what I like about this is that you actually get something for what you're paying. Does that make sense? 98%, not 99, but 98% of the time they go, oh, okay, that makes sense. I didn't have to print anything. I didn't have to show, right? I didn't have to do any of that because they just want to get that they know nothing in life is free. And they were thinking this sounded so good that what's it cost? Well, there's insurance with it. It's not like that other thing where they lie to you and say there are no costs. We're telling you it is. It's the insurance. But most of the time they don't need all that other stuff.
Yeah, that was huge. I mean, there's a cost to everything, and the cost of not having the policy is greater than the actual cost of the premium. You can't afford not to have it. And I love everything that you said. And I love objections because objections are just questions in disguise. That's all they are at the end of the day. So Jesse hit it right on the head is it's expensive, but maybe they're asking about the fees, the costs, and everything else as well. So spot on, Jesse. Thank you for saying that. So I mean, I can show you guys the e-app. I'm just going to go right from the illustration to the e-app, which you guys should do 100% of the time because it does save you about 10 to 15 minutes. So I am working with my team right now. I have no promise for you when this is going to happen, but I can tell you it will eventually happen. Probably won't even happen this year. It might happen this year. I really don't know. I'm trying to get us the opportunity to do the pin text sign option. So I know Jesse's going crazy. So for those of you that might not know, instead of doing the text option with us, where you have to click the link and sign disclosures, your client would receive a pin and you would just simply repeat that pin back to them. So I'm pushing for that. I wholeheartedly realize the shorter the application, the easier the process. The agents will always take the path of least resistance. I'm fully aware. So I am asking about that. I will tell you, our e-app, it's a little bit more extensive, but that's for a good reason. What I mean by that is this is how we're able to go to $5 million non-medical is because we're asking all of these questions. And once you're into a routine, into a rhythm, it really is flawless filling out our applications. Again, and I'm still in the Flex Life. I'm on the Flex Life part. I will tell you this. Do not sell an IUL and as an investment, and do not click the face-to-face button when you're not face-to-face. I say those two examples because those are the most frequent flyer complaints and compliance issues that come up to me with Family First Life. So don't call an IUL an investment because it's life insurance first. It kind of works in your favor as life insurance first because the tax code 7702 makes it so the cash value is tax free. So 7702 is the actual tax code that makes the life insurance grow tax deferred and you can access it tax free. It's not an investment. Don't call it such. Also, during COVID, carriers laxed a lot of their process, I'd say. You have three ways to sign our application. I'm going to tell you the only two ways. The first way is face to face. If you are breathing the same air as the client and they're literally in front of you, you can click face to face. If it's virtual, you cannot click face to face. You could get a chargeback 6 months, 18 months down the road if the client calls in and complains about you and you were not face to face. So it protects you, the writing agent, more than anybody else. Don't ever click email. Don't ever click email. always do the text option. The text option is the easiest, and we have two parts to our application process. You sign off on HIPAA, and then we start underwriting the application, and you sign again at the end. When you're filling out the second part of the application, the reason why you had to sign the first time is because if your clients forget to disclose a medication that was prescribed to them, for example, it's actually going to stop you and say, Jesse, are you sure you want to proceed? Because for this client, we did found that they were prescribed this anxiety medication. That helps you significantly because it could help your chance at an instant approval. But as far as our e-app, I'm not going to go through the whole thing because it's pretty self-explanatory, but I do want to talk about Rapid Protect in a second. So any questions before we move on to Rapid Protect? The pop-up blockers. Thank you for bringing that up, Jesse. I cannot emphasize this enough. So when it comes to our application process, if you are stuck at the medical questions and the health history and it's not loading, you have to contact iPipeline. So this is kind of like your iPhone not having cell service, and you're going to call Apple and say, what the heck, why don't I have cell service? You have to call Verizon or AT&T. So when it comes to that section, there's nothing we can do. I guarantee you, if you say, hey, and I don't care, you can use my name. I spoke to Devon Martin. He's the company representative. He told me to call iPipeline and get this fixed. They will be able to fix that bug for you. So it's 1-800-641-6557. Please call iPipeline directly when that happens to you. I realize it's a pain, but from what I know, if you're on a new browser, a Wi-Fi connection, or a tablet, sometimes it can happen. I know they put in a fix to have that completed. But if you guys continue to get those headaches, please let me know. But again, I'm going to talk about Rapid Protect. Any questions on what was discussed so far, or even anything that we haven't discussed? 1, 2, 3, 4, 5, 6, 7. That's the time it takes to receive a response whenever you ask a question in a public setting. So I always count to 7. Let's talk about Rapid Protect. So as a company, 15, 16 years ago, we were, I think, the 82nd largest insurance carrier in America. We're now number 7. We want to be number 3, number 2, number 1 soon. We realized that yesterday's home runs don't win today's games, and what has made you successful the past 15 years won't make you successful the next 15 years. So we decided to get into a space in which we've never been in before. I will tell you, Family First Life had a huge part in that. We chose to enter into the simplified issue space. We came out with Rapid Protect in October. There was 2 hiccups on the product. You couldn't choose your beneficiary other than your state until after it was issued, and there was not an option to choose your specific draft date. If you want to ask me why, I'm just going to be very honest with you. We didn't want to delay the launch of the product. So if we were to fix those 2 things, it would have been delayed by 3-4 months. So we decided to get the product into your hands. Those 2 things have been fixed. When it comes to Rapid Protect, why would you sell it over all the other simplified issue IUL space? It's because the regular and normal reasons you already sell National Life Group, the dependability of the company, the living benefits, the accelerated benefit riders, the rates of return, and the ease of business. I realize that our time length of our application is a little bit longer compared to most, but I guarantee you that we have less medical questions. So as long as the medical questions aren't extensive, then you guys should have a great experience when it comes to Rapid Protect. You are now able to choose your beneficiary, and you can now choose a specific draft date. And I want you guys to all remember as well, Family First Life participates in National Life Group's trips. So for free 99, if you get $200,000 in target, not AP, we measure off of target commission, you guys qualify for our trip from January 1st to December 31st. Next year, we're going to Cabo. We have another trip that's $1 million, and those are usually in Greece, Croatia, so on and so forth. But you guys participate in those trips, and you have to make sure you're utilizing our technology. If you haven't used our agent smartphone application yet, you're doing yourself a disservice. It is the best smartphone application in the industry for an insurance carrier. I promise you so far. I promise you that's the case. And in addition to that, make sure your clients download the client one, because I'm sure you guys get service calls, and there's nothing worse than being on hold and not getting what you need. We live in the world of technology, and I like tools because they make baby seals, Navy SEALs. You don't have to call the carrier and do everything on your own all the time. So make sure you're utilizing our technology. So Stella, yes, the Rapid Protect offers all the accelerated benefit riders when it comes to those products. So Rapid Protect is pretty straightforward. I mean, it's $50,000 minimum, 50, up to $500,000, and it's ages 0 to 60. So that's the max age that we go up to is 0 to 60. I do want to show knockout situations because believe it or not, what a knockout situation is it is a freaking knockout situation. Don't submit the application. Knockout means knockout. So if you look at the knockout situations, don't submit this at National Life Group. Just don't submit it. However, Rapid Protect is truly instant decision. At the end of the application, you're going to see one of three outcomes. Congrats, you're approved. Now our application shows you what rate class you are approved at, both on fully underwritten and Rapid Protect. So you will actually see, congrats, you're approved at standard non-tobacco. Whereas before, you didn't know what rate class you're approved at. Or instead of approved, you're going to see you are ineligible for this product, but you can probably qualify with a fully underwritten product. Unfortunately, you cannot take all the information from Rapid Protect and just put it into the FlexLife e-app. You do have to do the electronic application over. However, if it says you're ineligible, submit the FlexLife policy. It's not a guaranteed approval, but I have not seen one not approved when it says you're ineligible for Rapid Protect. The third option you'll see at the end of the application, sorry, you're denied. If it says sorry, you're denied, you will not get approved at any life insurance application with National Life Group. One thing you could do is our flexible premium annuity. So I don't want to get too far off into a tangent, but we do have an annuity where the clients can just pay as little as $100 a month, and it doesn't matter what their health is. They can be completely uninsurable. Devon, that policy pays pennies. I don't want to sell one of those. Let me paint a picture for you. If I were to give anybody on this call an annuity lead for $100,000 rollover, you guys would be all over it. This flexible premium annuity is creating future rollover opportunities for you. One, it does pay a smaller commission compared to a regular life insurance policy. That's obvious. However, it does pay favorable renewals after the first year. And after 10 years, if your clients are paying $200, $300, $400, $500, you have $100,000 plus waiting for you in 8, 9, or 10 years. You can roll over that into another annuity product and get paid full commission. So it's honestly just a last resort is our flexible premium annuity. But nonetheless, that is Rapid Protect in a nutshell. 0 to 60, 50 to 500,000. Same illustration that you were just in. You're going to do the LSW Rapid Protect. I don't want to assume that I know what you guys want to hear from now, but we can just recoup on National Life has the #1 IUL every year. I want us to remember that as a takeaway for many reasons. Our living benefits are second to none. I showed you what not to do and what to do instead of the electronic application. I quickly showed you an illustration on the IUL. We went through the e-app and we went through Rapid Protect. Are there any questions on what we discussed so far? Even if it's general questions, don't think of me as just the NLG guy. You can ask me about increasing versus level or why there's zeros early on in the policies. You guys can ask me literally anything that you have. I'm going to take a giant pregnant pause now to see if there's anything.
Devon, who is the ideal client for the Rapid Protect IULE? Like who should we be targeting for that?
That's a good question. People that are okay not having a superior product, but just want coverage right now.
Okay. And how does an agent know when to write FlexLife versus Rapid Protect?
I will tell you, if clients are healthy, they truly are healthy, and the client loves the living benefits, the accelerated benefit riders, that's when you want to go with the Flex Life policy. So if they want better cash value for a minimum death benefit max cash value, they definitely want high living benefits, and they're okay potentially waiting another week or two, that's when you would use Flex Life. But if they just want coverage right now, you're going to go with Rapid Protect.
Got it. Thank you.
100% of the time, a fully underwritten IUL will perform better than an instant decision. I'm going to quickly tell a 60-second story. So I just moved to North Carolina. I sold my home 6 months ago. I moved across country. I didn't want the stress of a homeowner anymore, so I moved into an apartment. When I went to get my apartment insurance, I could have went through State Farm, Geico. got extra flood insurance, extra fire insurance, all these bells and whistles. I didn't care about that. I just wanted the $200,000 minimum to move into my apartment. I went on Lemonade on my phone and I got a policy number within 3 minutes. I sent that to my apartment and I got my keys. That's kind of the situation where somebody just wants something right now and they're okay not going through the longer process. So that's just the closest story I could use to compare the two. Stella, you unmuted yourself. Go ahead.
Is the cash growth the same for Flex versus Rapid Protect?
I was impressed with the growth of Rapid Protect, but no, it's not the same. Flex Life will always be higher, but depending on the age and rate class, Rapid Protect actually performs pretty well. But Rapid Protect will always be lower when you're comparing the exact same client and everything to Flex Life.
Anybody else? Just feel free to unmute.
Can you explain a little bit in regards to like policy loans? I'm not saying that that's something I'm advocating for, but if it's something in the future, what are the typical reasons for people when they are choosing to utilize 10, 20 plus years later for a policy loan?
So help me with your question a little bit. Do you want me to unpack like which loan is best or why you would take out a loan? What it looks like for
Yeah,
your
well, I
IUL
guess
when you do?
what are the more common reasons as to most people would utilize a policy loan? Like I've heard people's version of it. Oh, I want to, have something for in the future for a wedding or things like that. But I would like to know what is the most common reasonings for it.
Sure. I will tell you the most common talked about reason is supplemental tax-free retirement. That's a lot of the reason why people talk about loans inside of policies. But there's also opportunities where instead of a 529 plan, you could set up the policy for the child where they can access loans in college. Or, as you said, your daughter or granddaughter could be getting married and you didn't know it. And now you want to, instead of taking it out of your savings or somewhere else, you just loan it out of your IUL. So quite honestly, Kyra or Kira, I hope I pronounced that right. It's as simple as life events, and you can use it for whatever you want. And the good thing about loans is you never have to pay them back because it just deducts from that death benefit when you die. So I don't know if that helps, but basically just normal life events that you would obviously think of for everyday people.
Thank
Okay, I don't want to talk past the close, but I will give it a few more seconds and see if there's anything else before we end. I just wanted to say
Devin,
thank you. Go ahead. Go ahead.
can you hear me, Devin?
I can hear you, Paul, and see you.
Okay. The question that Kyra just asked, I was wondering, because a lot of times you hear people say, well, 10, 20 years down the line, I might want to go into business and pull that and let my policy act as a bank and go instead of going to the bank for a loan, I can take it out of my. Uh, is that one of the recommendations that we could possibly uh, throw out there for someone who's interested in the IUL?
Yep, I would say it probably doesn't replace everything that people could think of or want to do. I would say it's more in addition to what you're already doing. But absolutely, you can take a loan out of your IUL, have an interest rate, charged to your loan, and then the rate you earn is higher than what you're being charged. So you kind of beat the rate with that. And that is a
Okay.
common way, is instead of just taking a loan from a bank, you can do it out of your IUL. The biggest thing is just not to take too much money. The general rule of thumb is to not access more than 85% of your cash value. The reason why is the policy could lapse and then you're going to be paying taxes on that money. So the answer is yes, Paul. Just make sure you don't overloan or abuse the flexibility of the IUL.
Gotcha. Thanks.
Yes, sir. Happy to come on again if you guys could have me. I just want to say that I know we need to earn your business every single year. We truly try to make it so it's easier for you guys because it's hard enough with what you do out there. I'm the most responsive person ever, and I am one of the hardest workers. And I promise you, anything you guys need, you have my support and commitment to make that happen. And I genuinely appreciate you guys letting me get on this call because I know you guys could have invited anybody. So really, thank you very much.
Thank you so much, Devon, for joining us. We appreciate your time and everything you do. Make it a great day.
You guys too. Thank you. Bye.
Thank you, Devon.